Hello and welcome to the Global Dialogue. I'm Shireen Bhan and we're in conversation with the Managing Director at IFC, Makhtar Diop. He's been MD since 2021 and is spearheading IFC's efforts to invest across asset classes and across 100 geographies. Joining me here on the program today, Mr. Diop, many thanks for joining us here on CNBC-TV18. It's an absolute pleasure to have you with us. Let's start by talking to you about India because this is day 5 of your India visit. Take me through the snapshot of the trip so far.
It was an excellent trip so far, and I met with the Minister for Finance to discuss a little bit what IFC is doing, and it was very impressive to see how the priorities set by the federal government were aligned with what we want to do in India. And as a result of it, actually in the last 2 years, we have tripled our commitments in India, and India is the largest portfolio of IFC worldwide. So that just to show for us the importance of India. But what is interesting in our portfolio in India is not only that we are lending with the debt, but we are doing a lot of equity. And equity means that you trust the country, you trust the company, and you trust a long-term engagement with companies in India. So, and the way we are doing it is that we are focusing in areas where we think that we can bring a lot. One of them is climate change. We know that climate change is affecting the world, affecting companies in India. And actually, we have a very large portfolio of investment in climate change. And we will be actually doing some signing already in that context. For instance, we have been among those who have launched the first green bond in India, but now we are entering a new era which is blue bonds, but also we are doing a lot of things, last mile, EVs, and we are also working a lot on inclusion. Gender is very important for us. So we are helping companies to improve their policy in terms of inclusion. And we are actually planning to put here in India a hub which will be focusing on women entrepreneurship to learn from the experience in India and to try to share with the rest of the world, but also to try helping investors, women investors. And right after this discussion, I'm meeting a group of PE managers, exclusively women, will tell me what they need and how we can help them more.
Well, that's wonderful to hear because on CNBC-TV18, we actually run a gender parity campaign called Future Female Forward with exactly that motivation is to really bring in parity across the workplace. So we're lovely to hear what the IFC is trying to do in India on that front. You've given us a very comprehensive view of the engagement in India. Let me unpack some of that. As you pointed out, you've of course been long-term investors in India going all the way back to 1958. You talked about tripling your investments in India. What's the outlook over the next few years? In fact, I'm given to understand that the IFC could invest more than the World Bank itself over the next few years.
Actually, we are already investing more than our sister organization, IBRD, the World Bank. It's because the need of the private sector are important. And we are talking about a country who wants to be the third largest economy in the world. And that will be driven by private sector investment. We have a country who wants to be a $5 trillion dollar economy. We have states who want, I just came from UP, and in my meetings with the chief minister, it was clear we want to become a $1 billion economy, $1 trillion economy very quickly. So the private sector will be the driver for this effort and exercise. So we'll be focusing now not only working with the traditional part of the country which have been growing very fast. We have been attracting a lot of private sector investment, to look also at states which are trying to catch up in terms of income per capita compared to the rest of the country. So that's the reason why I was in UP and I had a very good conversation about asset monetization, about supporting the priority. Agriculture is very important. This is a basket of India. I met a lot of ag-tech companies, startup, but also a lot of innovator. And we'll be putting a SWAT team, we'll be working very closely with the government of UP to be able to develop. And I would like also to extend a little bit further for the next closer state to be able to make sure that we have convergence, economic convergence across states in India. And if you manage to do something which is transformative in UP, you are affecting the whole of India.
Absolutely. It is going to have a multiplier impact across the country. But, I want to ask you about India in the context of the vision that Ajay Banga has outlined for the World Bank and the World Bank Group, and that is bigger, bolder, faster. And I know that even as far as the IFC is concerned, you are moving now towards more decentralization of decision-making, empowering the local teams to actually go ahead and move faster when it comes to decision-making. But on the issue of equity financing, and that's something that you talked about in your initial remarks as well, is that going to be something that you prioritize? Will that be the preferred route, even in markets like India? And especially, you talked about startups. Is that going to be something that you consider investing in?
That would be the priority. Actually, the Indian ecosystem is the most active in terms of startup, and we are supporting it very actively. Our president, Ajay Banga, has been very clear, and when he came, he using his experience in the private sector and as a captain of industry before joining the World Bank Group, he put in place a group which was called the PSIA, the Private Sector Investment Lab, and the idea was to the like of BlackRock, Temasek, all these big institutions. What it will take for them to invest more in emerging markets. So it was a kind of crowdsourcing exercise, and we met for the last year, and Ajay asked me to be coordinating that effort for him as the head of IFC, and we came up with a few verticals on which we want to work. The first one was when you talk to these pension fund and institutional investors, they want to have more certainty on the policy environment. Will the policy environment change? Will the government have reversal or not? That's very important for them. So,
and that's specific with in the Indian context?
No, more generally.
Oh, generally. Yeah.
That India doesn't have a problem because the direction is very clear. The government is very clear about its orientation, has been moving steadily in that direction. The second one is that they want more guarantees. They say those markets for us to have the return we need to have to be able to convince our shareholders or investors to come in those geographies. We need to ensure that the political risk is taken care of, and the commercial risk. For that reason, now at the World Bank, all the guarantee business has been put together. It was a little bit in IFC, a little bit in IBRD, a little bit in MIGA. Now everything is put in MIGA, so that there is a one-stop shop for investors when it comes to guarantee. The third one, which is very important for India, is local currency.
Yes.
And we have shifted a lot in our portfolio in India and doing more and more local currency, because we know that particularly when we want to do equity and you want to offset the forex risk, you need really to tap in the local currency. So this is something that we are working on. We are working not only in India, but also part of the world to ensure, particularly when you have exotic currency, how you can raise more local currency. The fourth one was a project pipeline. So how to really create a pipeline which is robust and which allows you to create asset class which are interesting for institutional investors. In that context, we have developed what we call we are in the process of finalizing what we call the WESP, which is a warehouse securitization platform, whereby we will be attracting investment which have been originated either by us or other entities, and present it to the market and use our tools, our guarantee, our de-risking, our ability to discuss with authorities in country to ensure certainty in terms of policy making, to take the reforms which are needed to be able to attract investors, and therefore mobilize the billion and trillions that we need to mobilize to develop emerging countries.
Well, so, and that's a lot that you have on your plate as part of the group to take forward. But it's a challenging environment. The global environment is going through a significant amount of volatility. Of course, geopolitical tensions and geopolitical pressures adding to the concerns and the challenges. Does that make it harder for the IFC to try and mobilize private capital, private investments? I mean, you've had a record year in FY24, $56 billion, up 28% year on year, on track to the 62 billion target?
Yeah, on track, and I think maybe more. And I have a wonderful team, and the team my team in India is doing a great job, and I'm very proud of what they're doing. And I think that we will be able to reach that target. And in fact, in the last 3 years I've been here, we've been able to double the annual commitment of IFC in 3 years. So we are in a right trajectory, and we will be keeping it and accelerating it. How did we reach that goal? It's simplifying. You alluded to it earlier. Simplifying, removing the bureaucracy. To be candid, a few years ago, people were telling me, "Okay, Makhtar, IFC is a diamond. Your products are perfect. Your staff and your team are excellent. But sometimes you can be a bit slow, or sometimes you can be a bit complicated." So we took this feedback very seriously and tried to work on it by doing a few things. First, giving more responsibility to people on the front line. So we increased the ceiling for the decision making by regional director and regional vice president. We reduced the number of projects that was sent to Washington for decision. There is a committee that I'm chairing for the largest project and the more complicated one. And we wanted to bring as little as possible project at this level, to bring really the complex projects that need decisions. The rest, I trust my team to make decisions. And this is the way we can be efficient. So we've been able to do that without a significant increase of our budget. Basically, in real term, our budget have basically not increased. And that's this kind of efficiency. We want also to use technology more and more. We are pushing to use more AI in our operation, so that we can reduce the manual transactions that we are having, which are time consuming, and use the time that is saved by staff to increase the interface with our clients. So this is a revolution that we are putting in place, and that's what allows us to double in 3 years what we are doing without increasing our budget. But also what I hear from my colleagues is a higher level of satisfaction, because you spend less time in bureaucratic processes and more time talking to your client, working with them, and innovating, because it would be. Now we ask a question, how is the world right now? The world is complicated. And actually we had last week, just after the UNGA meeting in New York, a meeting in Bretton Woods. Okay, it was Bretton Woods 80. So Kristalina, the head of IMF, and Ajay Banga asked the managing director and a few selected people to come and say, what will be, after 80 years, what's the direction that Bretton Woods institution need to take? It was clear that there are some major risks, climate change, geopolitics, and so forth, but also the level of cooperation, the way it existed at that time, maybe is not necessarily reflected worldwide.
Correct.
So in that context, as to how to find a consensus around a certain number of issues. What came very, very strongly is job. All countries being low income, large income, job is very important. So a lot of our focus will be in investing in area where we can create job, but also quality jobs. So that's some things that will be important. Second, when we interact with a country, with who are we interacting? Is it only the government? Is it the society at large? How to bring consensus around difficult choices? This is also questions that people reflected on, learning of the lessons of the last 20, 30 years. So the third element was that everybody agreed that the private sector will be the engine of everything that needs to be done. So how to rethink the architecture of these Bretton Woods institution to link them much more with the private sector activities, with the capital mobilization, and just to change a little bit the paradigm from being mainly institutions who are thinking about the sovereign, the public sector, to institutions we are also helping and realizing that the growth targets that they will have will be coming from the private sector. That was an important point of that conversation that Ajay and Kristalina are intending to pursue in the coming month.
Well, I think it's also a continuation of the much talked about as well as much anticipated reforms of the multilateral institutions that you spoke of as well. But, let's focus a little bit more on India and the work that you are doing in India. And starting with the big announcement of your visit here, on this trip, you have decided to go forward with your first inaugural blue loan, which you're giving $500 million to Axis Bank. Take us through that and what the aspiration is likely to be on that front, particularly from an India standpoint.
You know, we are very proud of it because IFC was among the precursors of the green bond. 10 years ago, we are among those who started really developing this asset class, making sure that we help people think about the challenges that we were facing. Just think about it. At that time, 10 years ago, people were not really focused as much as they are today on climate change. We anticipated that it was a challenge that the world will be facing, and we developed instrument and green bond, and since then, green bond became something quite important in the market. But what is also important is that when we did that, and we did that through the Sustainability Banking Forum, we set standard because investors wanted to make sure that the investments that are labeled as a green investment are really a green investment. So the knowledge that we have developed in it, the criteria that we have developed are now widely used by the market and becoming actually the main way of financing it. Similarly, last year we launched a guide on blue bonds. We did it in collaboration with the UNEP, which is an environmental program.
Yes.
And we launched it at the COP. And it was an important element because it allows now company who wants to issue blue bond to have a guideline to know how to do it, what is blue, what is not blue. And that's what we use that knowledge in India to launch the first blue bond, which should be merged a little bit with green bond for Axis. And we are very proud of it because if the market reacts positively to it, and it seems to be the case, we will have a lot of a new asset class that can be developed, a new thematic bonds that will be developed. When you think about blue in the context of India, everything is water in India, if you want to think about it. So there is a lot to do on marine plastic, on sanitation, and on clean water, and name it. So the sky is the limit if you want really to push in the private sector solutions that are addressing some of the important challenges that the world is facing in that area. In December, there is this One Planet, there is this summit in Saudi Arabia on, and we would like to take that opportunity because there will be a session on the One Planet Summit on water that President Macron has been launching. And we would love to present the experience of India and to take that bond issuance as a good example of what we can do at scale with other companies in the rest of the world.
Well, that's good to hear. But, you know, since we're talking about climate financing, globally, what do you believe is the need today and where are we in terms of the current shortfall? And even from an India point of view, given the growth aspirations as well as the aspiration to be a developed economy by 2047, what will be, in your assessment, the need in terms of financing and where are we today in terms of shortfall?
When you think about the financing, the climate financing, I was also involved in COP21.
Yes.
So COP21, it was a conversation between NGOs and government. Private sector was mentioned,
but not involved.
En passant, as they say in French. And it was not really at the center of the conversation. COP26 was a big step forward. For COP26, you had private sector, philanthropy, and government starting to say, you know, we cannot work in silos and each of us trying to move this agenda. And more importantly, government realizing that the big investments that are needed to tackle this challenge will come from the private sector. Right. And therefore, they need to be taken into account. And so COP28 was, so some commitment were made in COP26. And in COP28, it was materializing some of these commitments. I must say that the UAE has really made a huge effort and mobilized a lot of resources around the financing. And actually last week, when I was at the UNGA, there was a meeting called by Altera to mobilize billions of dollars to de-risk investment in climate change. So the not the challenge, but the new paradigms that need to be strengthened is to be mobilized as much blended finance to de-risk investment in the climate change, particularly when it comes to adaptation. Because often adaptation, project adaptation have a rate of return which is lower, but have a very high social rate of return. So we need to link, to bridge the gap between investor thinking about private return and the social return that you can get by addressing some of these. And that is the role of a blended finance and the resources. So if we want to catalyze and mobilize these billions, we need to raise a much more blended finance, and that's what we are doing. To link it to the work of equity that I mentioned earlier, right now we are in a process, and this is something that Ajay Banga is pushing us to do, is to have a fund that will help smooth the variability and that you have on the equity market. And a lot of this money will go in climate change related investment. So as we know that there are a lot of fluctuation on the equity market, in emerging markets, you need to have something to smooth that at a buffer. So we are in a process of preparing a fund where IFC will be putting part of our income, but also crowding in income from philanthropies and others to be able to attract more equity, which has the best leverage in terms of investment in climate change, but also in other sectors.
Just on the back of the visibility that you have in India, the pipeline that you are currently working with, as well as the priority areas that you intend to work with, infrastructure, EV, so on and so forth that you talked about, what could the investment number potentially look like over the next 3 to 5 years?
I have my KPIs, the team, so they know it. But I think
go public with it.
No, but I think that it will depend a lot on the mobilization numbers. The flow will be 5 billion a year. Okay, that's what 5-6 billion. And my team is looking at me with big eyes, saying, well, what is he saying? So the flow will be that. But I think that if we think about mobilization, we can have multiple of that number, a significant one. What does it mean? For instance, today we had a conversation on asset monetization with the Highways Authority. So these, they're talking about bringing $3 billion a year of asset to be monetized. If we manage to work with and be a preferred partner in that exercise, the number will be taking another dimension. And we are seeing a certain number of opportunities of that emerging. So I don't want to commit too much on that, but the direction is to say, the flow is 5-6 billion in the current setting, but with some of the new opportunities that I'm seeing in terms of asset monetization, it might be a much larger number.
Well, speaking of new opportunities, what's interesting is that you're not just looking at climate and infrastructure, you're also looking at creative arts as well. And you've had some meetings with people here in Bollywood. The IFC is potentially looking at investing in that space?
Exactly. When you must be saying IFC and Bollywood. What's
going on there?
What's going on there? There's something. I mean, it shows
what is the script that you're working on?
No, it means that the world is changing, and there are some things which were not part of the world. We're not talking to each other, and I think that it's important that they talk to each other because of job creation, because of social impact, and so forth. And I'm a passionate of art, so I can see the value personally of it. If you think about Bollywood, for instance, if you want to change the social norms in a country and have the development rules that you want to have in terms of gender equality and so forth, movies are extremely popular, powerful. You can write the best report you want, you can say everything you want, but until the father and the mother go with a little girl to the movies and see someone they identify with, and we touch really their feelings, you will not have the change that you want in the behaviors that you expect people to have and the leadership that you expect women to have. So for me, it's not only about financial investment and return. I'll come back to that.
But it's also
the impact and really change. I had also, I was talking about cricket, and
Yes.
you were wondering about cricket. The conversation I had on cricket was just fascinating. What leadership means in a sport, how a captain who is young can become a more mature captain, how she's changed her views was just amazing. And the podcast, when it comes out, I really...
Yes, with the former Indian women's cricket team captain, Mithali Raj.
She was just fantastic, the way she described leadership. And for me, it was, can you tell, share with corporate the way as a captain you thought about leadership as a woman leader. And this is the kind of things that we are doing with our creative. Now, the economics of it, it creates a lot of jobs. We all know that. It's very important for the image of India as well. I grew up, I'm a West African, I'm Senegalese. And you'll be surprised that when I was growing up in Senegal.
You watched Indian movies.
I mean, everybody watches Indian movies. And you will be surprised to see that in my own countries, people who don't speak a word of Hindi, who have never been outside Senegal, were wearing sari and learning the dance of Bollywood dances they were watching on movies. So, and when I was young, there was someone very famous, Albella, an actor.
Okay, Amitabh Bachchan.
No, but before that,
oh,
even.
Before that, okay.
Yeah, and there were some actors that in popular neighborhood people knew. So what is happening today? You have great producers and great actor and great directors in India, but they are paid to produce something and to have a product, but the intellectual property doesn't remain with them, because they're financed by a corporation to produce a movie or a series. So in fact, they don't capture the whole value linked to their creativity. So what we would like to do, and the corporation we would like to have with them, is to invest so that they can produce on their own without having financing, sell to these large streaming corporation, and keep the IP. That will be the game changer. And that will be increasing the value addition in it. If you think about it, the same phenomenon is happening in other part of the world. In a country like Nigeria, there's a word now, Nollywood. Okay, learn from Bollywood, where you have a large series and they start also being on Netflix and so forth. So eventually, it will be important to learn from the experience there and maybe to connect these two ecosystems to work together. So this is something that, is not...
A new experiment.
Exactly.
When do you hope to get it started?
I don't want to give a date, but the team has started already discussing terms. So let's see what we come out of that conversation.
And will India be the incubator of this experiment for the IFC?
That's what I want. That's really my target. And I hope that if things goes well, I touch wood, maybe next time I'm here, we would have made some progress.
And hopefully it'll be a blockbuster that we can speak of. But you talked about Senegal, and I want to talk to you about what's happening in Africa as well, because you've spent a significant amount of your time at the World Bank focused on Africa. And as part of India's G20 presidency, the African Union was included as members. Do you worry about the fact that the current economic, geopolitical and economic climate is going to constrain resource mobilization to large parts of the world, including Africa, where money is most needed at this point in time?
No, I think you're perfectly right. I think that when you have uncertainty, political uncertainty, when you have differences between large countries, the smaller countries suffer. But also we have a situation, unfortunately, where politically, we have some instabilities that we didn't have in Africa for a very long time. Very long time, we didn't have a coup. I'm lucky I'm in a country where we never had in our history any coup, so I'm quite grateful of that. But there are some countries which were free of this kind of political situation, where unfortunately, recently have been there. And it brings me back to the issue of job creation. A lot of the situation is rooted also in the fact that people don't get enough jobs, don't have enough opportunities, and sometimes just can be disgruntled and unhappy and get into activities which are not the ones we hope them to get into, and also to think about a different way of changing the political situation. So these are things that if you want to address it in the long run, it's important to continue creating jobs, quality jobs, so that people will not be migrating from their country as they do right now, and feel opportunities. For instance, you take agriculture. Africa has a lot of land, of water in some part of Africa. It's the only continent we didn't have is green revolution. So there is something to be done there. So it requires money and investment. And that's why the policy certainty is very important for investors. It's very important. Secondly, developing the domestic capital markets, which often is not deep enough to be able to mobilize resources. Third, to be able to continue developing the regional trade and make sure that you have regional supply chain. Recently, there were an important, one of the largest investor in Africa called a certain number of people to discuss a little bit what can be done to attract more investment. And we had a good conversation because it was mainly among private sector people. It was 50 people with a couple of former head of state and one head of state to say, now, if you want to really move the needle, what it will take. And the private sector people talked about it. And one of the things that came out from it is a need to have a much more robust dialogue between the public sector and the private sector at a continental level to be able to address those challenges.
You know, you talked about the jobs challenge, and that's a challenge that we face here in India as well, even though we are growing at 7.5%. Now, you know, from an IFC's perspective, when you talk about the investable opportunities growing significantly from the number that you just talked about, which is a $5 billion annual number that you're currently looking at, anything specific that you would like to see being done, prioritized, changed, especially on the part of the government as well as the private sector, to deliver on both the promise of growth as well as the promise of jobs?
Yes. The way we are now being a little bit measuring our impact, we are moving, and this is something that Ajay Banga has been really emphasizing. We used to have a scorecard of 120 objectives, which was, you know, difficult to monitor and follow up. He is bringing it to 20, and whereby we will be thinking not only about output but about outcomes. Okay, and one of the outcomes is job creation. He put in place his private sector investment lab. He's in the process of putting a council on jobs, where you try to bring together people who have been really successful in creating jobs in their business and what it takes. So we'll be a lot of crowdsourcing and learning from new ideas, because you need to be humble in this area. This is one of the toughest areas. You don't meet a head of state in the world who doesn't talk about job creation. So if it was simple and easy, everybody would have solved it. So you need to be humble when you address it. And so the first step is to see what you can learn from people who have done it and done it well, and what they have done differently from other people. So that would be part of the exercise. The second part of the exercise would be to have a lens when we are looking at some projects, some investment on job creation. For instance, I would like to look at the state in India where you have a GDP per capita who is lower than the average, and try to see how to bring them more in
UP, for instance.
UP, and that will be something that will be affecting job creation, because that will be done through job creation, particularly if you look at sector like agriculture, which are labor intensive. So how to bring technology, how to use inclusion, or everything that we are doing to be able to increase that, but also to think about other aspects that will affecting it. Is the World Trade Organization rules allow to export more and less? Do we have restriction? And I think the big challenge that the world is facing today is some of these constraints about exporting your goods in some countries, which might affect some of it. But one of the lessons also that we learned in the last decade is that when you think about globalization, you need also not only to think about job creation, but about job destruction, And what does it mean when you have job destruction? We know that now we have a generalized purpose technology, AI, which is now becoming mainstream. So one has to think also about how you will be using that technology, which is needed for increasing productivity and increasing welfare, but to do it in a way where also you think about job creation, and that's another big issue. So there is a lot of questions.
Yes.
And I think that in that exercise, one has to show humility and also to do a lot of learning by doing. And you think that there are some sectors, you have some assumptions that it will create jobs. Tourism is one of the examples that you maybe, more tourism in India can create more jobs. You have the supply chain, the world supply chain. You know that there is a willingness to diversify geographically the supply chain around, the green economy and so forth. How India could be more involved in it. So you have different ways of looking at it. But the more important is that now we'll be much more centrally thinking about job creation when we're engaging. That's why, for instance, even if there's not a lot of money, Bollywood is important.
Yes, it certainly seems to be. But let me end by asking you, we're almost at the end of this calendar year and we're at the start of 2025. The headwinds that we spoke of, how confident do you feel of being able to achieve some of the objectives that the World Bank Group has set out for itself, and particularly at IFC, in terms of mobilization and in terms of committed investments as well?
As we go and we see that the world economy is we are moving out of the crisis, the COVID-19 crisis. Have you seen it? Interest rates are starting to go down in large economies. So the opportunities, the pulling factors that you have in some of the economy in terms of FDI, in terms of capital flow, will be looking at other opportunities where they can have some return, which is significantly higher. So I think that offers a good opportunity for countries which, at a time when interest rates were higher in OECD countries, were not accessing as much to the capital market. So that will be a good opportunity that one needs to seize. So that's why it's exercise of listening carefully to what has been the obstacle for institutional investors and other investors to go to this geography is important, and we need to take those lessons. Secondly, we need to look at in the way we are evolving as an institution, and we will be capturing it in what we call IFC 2030, which is our new strategy, is what is the best way to crowd in private sector and to have a multiplier effect. And it's clear that equity is the best way and the most recognized way. So the more we'll be investing in equity, particularly in emerging countries, the more we will be able to have this multiplier effect and attract investment, but also give confidence to investors who are not familiar with the geography to invest in those countries.
Well, we look forward to hearing more from you about your investments in India, as well as how the Bollywood experiment turns out. But it's been an absolute pleasure. Many thanks for joining us here on the Global Dialogue on CNBC-TV18. We look forward to seeing you again here in India and hopefully in Davos as well.
It's been my pleasure, and I look forward to seeing you again in Davos and we'll do my next trip in.
Well, thank you very much for joining us. With that, it is time for us to wrap up this edition of the Global Dialogue. From all of us here on the team for now, goodbye and many thanks for watching.